welcome back to Market Focus. I'm Brad Levin. It's October 4th, 2019. And guys, I hate to say it, but we're not getting off to a good start in the stock market this month. In fact, it's actually the worst October start we've experienced since 2009. Investors are really grappling with the slowing trend in the U.S. economy, and concerns are really rising that we could be moving towards recession. This week, the Dow Jones Index lost 1,300 points at its worst. Now, yesterday, fortunately, it rallied back after being down 300 points. It closed up 122 points on the day, and today we're seeing a follow-through of that rally. But I want to talk about some key economic reports out earlier this week. We got the second back-to-back report now showing contraction taking place in the manufacturing segment of our economy. So CEOs are really pulling the reins on the production output because of the impact of the ongoing trade war. Also, the latest read on CEO confidence reflected the lowest level in 3 years. Now, more importantly, we want to take a look at what's going on in the service segment of our economy because that's going to reflect the important health of U.S. consumers. And what we saw this week is also a decelerating trend, unfortunately. So why is the stock market now rebounding the last 2 days? Well, whenever we have bad news, investors can interpret it as a positive because it means at this point, the Federal Reserve is more likely to try to stimulate our economy through further interest rate cuts. And in fact, right now, the federal funds futures market is pricing in about an 80% probability of a quarter-point rate cut to come at the end of October. Well, what about what's going on in the overall economy? Are we moving towards recession or not? What does this all mean? Well, for that, I want to take your attention to the Ned Davis U.S. Recession Probability Model. Developed back in 1979, this report takes a weight of the evidence approach, looking at a broad swath of economic data to really gauge what's going on, and it's correctly identified recessionary risks as they've occurred before every recession we've seen since 1979. Right now, this report is fortunately showing still a very low level of recession risk, so that's good news. What about outside the U.S. though? Well, we've been in economic contraction now for more than a year, but we're starting to see signs that our stimulative efforts through lower interest rates are also playing out in 80% of the central banks around the world, and it's starting to take root. Green shoots are now beginning to pick up, and in fact, this report here shows that manufacturing activity bottomed out a few months ago, and it's now starting to improve. So this is a good sign. Now, in the very near term, some critical events are going to be taking place that really could affect the trend of the market overall. Most importantly, trade. Now, we have upcoming next week ongoing negotiations between us and China over the trade war, and I think President Trump must be feeling a lot of political pressure these days to try to negotiate a deal, especially with the fresh impeachment hearings now taking place affecting his presidency. Also, earnings for the third quarter beginning to come out, and we're going to be looking for a change in the deceleration trend. In other words, if earnings come out less bad, that's going to be good news. But guys, overall, we are certainly in a very weak environment, and this is an environment in which investors should be cautious. But if this were a traffic light in front of us that we're looking at for the market, it's flashing yellow and not red, in our opinion. Now, all year long, we've been taking a more cautious approach for our clients, allocating a lower percentage to equities and also a higher percentage exposure to bonds and gold in our global allocation models. In our individual client portfolios, we've also been adding exposure to alternative investments to dampen volatility. So at this point, we really do urge remaining cautious, but this is not an environment to be alarmed. Continue watching. We'll continue to keep you informed, and I hope you have a great day.